Saxo Bank says it has seen a significant increase in trading volumes in foreign exchange options, CFDs, stocks and futures. Well, Lars Seier Christensen is co-chief executive and co-founder of the private Danish bank, and he joins us now from the company's headquarters in Copenhagen. Thank you so much for being on the program today. Volatility, not such a bad thing in certain times. Do you expect it to continue filtering through your bottom line? Because, of course, there are just many more trades.
Well, I think our growth is probably based also on our sort of normal organic growth. We see a good number of new clients, new assets coming into the bank on a continuous basis. I would say the third quarter was very active. It's a little more muted currently, but overall it's a satisfactory year so far.
Of course, the problem with volatility is that although we've seen a lot of it in the previous 6 to 7 months, in fact, we've seen some really peaks and troughs. Going forward, the volatility, I guess, is too much. Investors, shareholders will just get scared. Is that your biggest fear for the next 12 months?
Well, I think that there's always going to be people reacting through both types of business cycles. So we're relatively independent on whether volatility is very high or not so high. There's different ways of using the market in different scenarios. But there does seem to be a little bit of an increase in risk adversity in the last 6 to 8 weeks. I think, though, that unfortunately, I would say the way that things are developing in the Eurozone is not really pointing to less volatility in any foreseeable future. So there'll still be a need for hedging. There will still be some opportunities in the markets, and I think that this environment is going to stay with us for some time, and that overall, as we see new customers coming into the bank on a continuous basis, we should continue to do reasonably well. And
so do you think that actually this volatility will also increase from what we've seen in the last 8 months? How difficult is it to call volatility? Can you say, not for certain, but can you, tell us whether you think it will stay for the next year or even longer?
I think it's obviously very hard to predict, like many other things in the market. But when you look at the problems in the Eurozone in particular and the general economic challenges around the world, I think it's very hard to see us reverting to a low volatility environment anytime soon. So my expectation would be that we stay around current levels for quite some time to come. And unfortunately, I think that the problems in the Eurozone are going to accelerate in the next 12 months. So that is not going to make for a low volatility environment, in my opinion.
And so what does it mean for your trading volumes over the next 3 to 4 months?
I think they will be steady around current levels. As I said, there are a number of things affecting our trading volumes. Of course, volatility is one, but another thing is, as you correctly point out, what is investor reaction to that? I think that the fundamental thing that we look at in the long term is what is the general development of the business. Do we get more clients? Do we get more assets? And that seems to be on a pretty firm upward trend at the moment. So certainly there are people looking to get into the market even at this point, and we don't see any real change to that trend. So with volatility levels probably on a very varied patch, but certainly staying relatively high, I don't see a lot of change, and I think that trading the next few months will be pretty comfortable.
Mr. Christensen, why are people actually wanting to play on the markets? You're just saying that you're possibly attracting more customers, but why is that? Are people scared to trade on their own, or do they just see opportunity because where there's volatility, there's also a quick buck to be made if you have the stomach for it?
I think people are looking towards businesses like ours because we offer a number of tools which may not be available at traditional stockbrokers, derivatives and foreign exchange, things like that. So in my view, it's also part of a general sophistication trend. When people look at this market environment, and this is a long-term trend that's just gaining more momentum, they also realize that there's more to life than holding a long-term, long-only equity portfolio. There's a lot of things out there that you need to hedge yourself against. There's a lot of opportunities, and there's a lot of instruments out there. And I think it's also part of a general sophistication in the private investor base. and of course an increased need to look for alternatives to just traditional long equity positions.
And away from the world of trading and investment, you also just announced a major sponsorship deal. Is this the right time for you to be spending money in order to get market share?
Well, I mean, we sponsored Team Saxo Bank, that is one of the world's greatest cycling teams, for a number of years. We shared that sponsorship with Sungard in the past year, and very grateful for their contribution to the sporting success of this team. But for the coming year, we've agreed with Sungard that we will go back to being the sole sponsor. And this is a sponsorship that reaches out to literally hundreds of millions of people around the globe. So it's a very, very strong way for people to at least be aware that there's something called Saxo Bank. Does that necessarily need that they mean that they understand exactly what we do? No, but it creates like a base for then going out and explaining to people what Saxo Bank is about, and that has been successful for us. We have had all or part of this sponsorship for 4 years now, and in 2012 we decided that we would like to be the sole sponsor again. So we believe it is the right time to make people aware of our existence, and it's also just building on something that has been successful for us in the past.